All right, my people. I hope you had a blessed week and weekend. It was a very interesting week with the news and everything. Gold has played tricks on us. Gold has been moving insanely, stupidly, crazy. I don't know, frenetically. You can use all kinds of words for this, but I've traded gold for several years, and I've never seen gold actually move like this. And the funny thing is, it was moving parallel with the US dollar. So I decided to take this from scratch. Naked chart, nothing on the chart. Let's just understand where we are and try to figure out what happened. All right. Because this is what happened, this dump here. But we have to understand that we're on a daily time frame now. So it's a macro perspective. Okay. First off, I'm gonna mark out this here. So we have basically this line here, and that symbolizes this three tops. 3 times has the market hit this level, and yeah, it made all-time high last time by a couple of pips, but it's still not a big deal. And so it's basically it still counts as an equal high. And I'm going to make this one orange so we see clearly. All right, cool. So, and why am I marking out this is because this is a target level. And this is definitely a very hardcore, strong psychological level that we will need to breach with the market. We've been saying forever that market is going to dump, clear some liquidity, and move up. Honestly, I didn't think it was going to dump that hard. I thought it was going to come to 1850-ish, 1860. You guys heard me mention that several times. And I thought from there we would bounce up. But we didn't. It felt almost like there was such a momentum in the crash here that it couldn't stop it, and it just kept going, and created basically an equal bottom with this bottom here. And this is what we're going to look at now, because here's the thing. If we look at this, all these swing points here, we go in the weekly time frame. And we do the weekly swing points. What do we have? High, and we have low. Or we do like this. Sorry, I take it back. Let's just measure. Let's just start from here. This is the most important part, because otherwise we will be calling out highs and lows everywhere. So if we want to call this here a high, then that means this is a low, and that means this is a high. This is it. This is the weekly swing, or the weekly structure. But like I said, we counting this as an equal high, so we won't be counting that as a separate high. So basically, to make this very simple, what we're gonna do now is this here. Look, bottom, low, high, low, high. All right, here a low. But here's the thing, and this is what I want to show you. So this low has not been breached. If we breach this low here, then we have a change of character. All right, so if we breach this low, I'm gonna remove this red dot so that it's not confusing. If we breach this low here, a change of character, and this is basically what we was waiting for, because if we don't breach that one, then the plug is out, and I think we go going down all the way down to this order block here. That's a couple of thousand pips again to move. But what this was here, I think this was just a massive liquidity grab, massive liquidity grab. And now what's going to happen? So we didn't breach that low, and now what has happened? If we start zooming in, is this here. Now we're looking at the daily structure to get broken, basically. Actually, it's this one that we're going to count as the daily. This is the change of character we need now to the upside. And that's the change of character we need on the upside. But if we go down on the 4 hourly, what do we have? Boom, here, change of character on the 4 hourly. So on the 4 hourly, we already have started an uptrend, all right? We already have to have a change of character, and we already have an uptrend. Now what we need to confirm this is this here. Whoop, change of character, then the drawdown. And then of course we're looking for the entry. So what we are going to do now basically is we are going to see Monday, of course, what the market does, how it respects this order block that is here. I'm going to mark it out. Here, it's an order block. Not very strong, but it is there. We had another one here that actually was strong, and I thought was going to stop the whole move, but it didn't. This one here. Why is this one not strong? Well, this one didn't create no change in character. It didn't break anything, like we say. Whilst this one did, and this one actually swept a little bit of liquidity, but still low. This is going to be a breaker block, of course. So what I'm looking at now, let's pull up Fib here quickly. Boom. Boom. And as you see, the 88.6, perfect resistance. So what we're looking at now is this here. I'll pull back from here. But I wouldn't be surprised if that pullback is very shallow. Now, this is 130 pips, so don't get fooled by how small the trading zone is that I've marked out. We're on a 4-hourly time frame. But I wouldn't be very surprised if this happens. Whoop, whoop into this order block, maybe some accumulation, and then whoop. And this is when we change character, when we break the structure completely. So it's either that or further down. We have a lot of liquidity to fill here all the way. Like I'm not going to mark it out because all of this here is liquidity all the way. So market can basically go how far it wants to grab this liquidity. But I'll tell you this, I'll be waiting for that reversal, because when that reversal comes and when it reverses from here, if this is just a pullback, like I think it is, I actually hope it is, then that reversal, we do want to catch it, and we will not try to sniper entry catch it. We will swing trade catch it. So we will go in and try to scale in on it with quite big stop losses. So we will use small lot sizes on it. Why? Is because of this here. So let's say market pulls back here, 1880, or let's say here around 1860. Let's say 1880, around here. On a daily time frame. Here's the triple high line that I pulled, remember? And this is what I see. I feel very, very, very confident of this setup here. I will show it to you. And I've been looking at this for almost a year now. Here. I see when we enter that buy position from here, then it would be around here, this area. We're going down all the way, at least all the way up here. Okay, that is 2,700 pips. All right, that is nothing that will happen in a couple of days. Maybe, you never know with gold. It can happen in a couple of days, but I would say a couple of weeks. All right, but money in trading flows from the impatient one to the patient one. Remember that. So be patient, believe in your setup, and hold the position. If we break the structure here, remove some stuff. If we break this structure here, boom, we bullish. We break this one, we super bullish. We break this one, we to the moon. All right, so that's it. But we will have a drawback first. This market won't just skyrocket like it has done here, like a fucking, yeah, like a Elon Musk rocket. It won't rocket away from here. So it will have a drawdown. It needs to pick up more fuel. Market needs fuel to move. And what is market's fuel? It's liquidity, cash, money. So it will have a drawdown, pick up liquidity to then have another pull, another boost upwards. If it is, as I'm saying, that we will break this downtrend and now start going upwards. Basically, we've been in a bull market. We broke it, and I think we have changed it it looks like we have changed with this change of character on 4 hourly. It looks like we have changed it to a bull market from a bear market. But to completely confirm that we are in a bull market now, we need to break this, change this character here, break this character here on the daily time frame. That's the last confirmation, and then we know. And then we can look at trades like this one here, for example. I can tell you this trade has 180 pip stop loss. You must go in with a very, very small lot. Okay, of course, I will refine it a little bit when we come to the area, but right now that's what we're looking at. There's 180 pip, 160 pip break order block there. So that's that. So right now we're waiting for the sell to happen. We're gonna catch that sell because it's gonna be at least 50, 60 pips at least if we don't break down completely. And then we will just be waiting for the new pivot point for where the drawback is finished, and we will start moving upwards on this big swing trade. That's what I have to say on gold. My man Frederick, take the mic.
All right, people. So I'm just gonna switch this recording stuff. So we have them. So, do you guys see my screen? No. Jeremy need to finish his screen sharing.
Oh, my bad. No.
All right. So I was thinking we can go through the GBP, no, EURUSD trade and the GBP USD trade that we took last week. I think we cut around 110 pips on that one. So here was the reason why we took this trade on last week. How come that gold pump as the dollar is rising? That is called market manipulation, my friend. Pure market manipulation. So we talked about it, me and Jeremy, like, bro, how is it possible that gold is pumping and the dollar is pumping? What happened was, I'm gonna take this away. Like, let's start on the daily. Jeremy already ran you guys through it. This is all manipulation. We have a daily candlestick that is 626 pips. It moved 626 pips in one day, guys. While the dollar still was pumping. So that's pure manipulation of the market, basically. Yeah. Other than that, we don't have so much for you guys today.
Man, I think we must be the best educators ever because we never have any questions.
Yeah, man. Our people
The gold pump as the dollar is rising, grand stuff. Yeah, bro, it's exactly like Frederick just explained. It's pure manipulation. This is how you see that the market is highly manipulated. And all right, guys. With that said, have a beautiful rest of the Sunday. We need to keep working on Prosperous in the back end so that everything can be super smooth here and even better than it is. All right, guys. Have a beautiful Sunday. I'll see ya.